Welcome back to the channel, everybody. Welcome back to the Matrix. My name's Morpheus, and as always, I'm going to do my best to analyze the market, review some charts, and help you unplug from the noise. If you find my content helpful, please smash the like button, subscribe to the channel, and hit the bell notification. Just a reminder, this is not financial advice, and I am not a financial advisor, so please do your own research. With that out of the way, let's jump right into today's video. All right, everybody. So today I'm just going to review the SPX day trade plan for September 11th, 2025. We actually had the exact same plan for yesterday as we did for today. And the reason for that was we got our PPI candle here at 8:30 and we had a high of 65.57 and a low near 65.33. Candle before that was 65.32. That's where I got yesterday's plan, and today was a carbon copy. Today at 8:30, we got our volatility candle off of CPI. We had a high of 65.55 and a low of 65.31. So give or take a point or two. But essentially, this was our breakout, breakdown range. And the strategy that I'm most consistent with and happy to post as a plan is one that if you break out from the level with a confirmed volume or price action or break down from the level, I feel confident in taking the breakdown or breakout off of those levels. Obviously, nothing's 100%. There's stop losses incorporated to mitigate risk, but that is my strategy and that's how I develop my plans. So if we read through pre-market level 65.57, high, low 65.32, pivot was 65.44. The reason the pivot was 65.44, it's just a 50% of that range there. So on a breakout of a bullish, on a bullish breakout price action, entry buy above 65.57, confirm with a 5-minute close, stop loss 65.50 or 65.44. And then obviously we're going to target 65.65 or for our first target, 65.75 for our second target. So risk to reward 1 to 2, 1 to 3 listed right there. A bearish breakdown entry sell below 65.32. Confirm on a 5-minute close again. Stop loss 65.38 or 65.44.7. Target 65.25, 6,500. And yesterday, you can see that worked out. It took some time, but once we broke down the level in the afternoon, we did in fact flush to 65.25 and we hit 65.16. So that was a trade we took yesterday in the afternoon. And today's action is what I really want to focus on. We had the opposite move. So we were able to break out from that range. I'm going to get rid of this and we're just going to look a little bit closer at today. So again, here is our breakout, breakdown range. And I like to just draw a rectangle around wherever my high and my low is. It makes it really simple. Basically, within this range, we're not really looking for more continuation until we break above our high or break down below our low. So this was today's action, and you can see here that yesterday this was our breakdown level. So the other thing that I incorporate is the 30-minute opening range. So if our 30-minute opening range is within this key area of resistance and support, I'm typically not going to take a breakout of the opening range much further than the high of our plan. once we break down, in this case here, again, I'm not going to look much further than the support area on our plan. Once we break down from this level here, there's much more conviction that we're going to get some follow through. And then I basically look to the left to target some key areas of support. So 65.25 was on the plan. 65.22 was the low here. Nice even number was 65.25. So that made sense for the plan. We got a little bit deeper on that, no problem. So basically, I'm just trying to capture the momentum from this breakdown here. Just like today, after CPI, we got our range established. We got our opening candle here. We did have a gap down below. And Thursday, highest probability of filling a gap. But I wasn't focused too much on that because we did get, CPI was not a bad print. It wasn't a great print, but the market, you could see, reacted positively. So basically, 9:30 a.m. this candle prints here. We do have a high and a low that we can kind of mark out. And I'm going to switch down to a 5-minute time frame. It's one of my preferred time frames to trade off of. I'm going to show you exactly how I traded it and what I was looking at this morning. So 5-minute candle prints. And again, I like to use the rectangle tool a lot. And basically, I'm drawing a box around the high and the low. It gives me a nice little range. We did not get a real strong close below this ever. We came down, tested the bottom here. There's this little doji here, and immediately 9:45 candle prints and reverses and goes right back to the top. Now here's where the light bulbs start going off in my head. So at this 950 candle here, if you look at that, opens up at 65.54, slightly below our breakout, and then ends up closing at 65.60. Now it's telling me, okay, it's breaking out from our plan level. The other piece of information that's important here is there is a small fair value gap here on the 5-minute time frame. If you look here, that's significant. You don't know until this candle closes at 9:55, but there's a box that you check in your mind. Okay, breaking out to the upside of our plan. So immediately, if you did nothing else on in your mind, you can say, okay, I can enter a level on a pullback to our breakout level, and I can set a stop below, the first candle that breakout occurred on. So basically, you would get in at this candle here. When this candle closes here, you can essentially take calls or go long, whatever you're trading. This is not just for US 500 or the SPX. This goes for anything. So we are above this 20 session moving average here. That's what this orange line is. So we push above that. Now, to take it a step further, this green shaded area here is the 30-minute opening range. Once we break out above that, I'm checking another box. I'm saying, okay, we are now breaking out breaking out from a significant level after 10 a.m. So now I'm drawing more significant price action to further my case. So there's another fair value gap here, and these are 5 minutes. Again, you don't know that this is relevant until this candle actually closes. So with that being said, the cleanest, in my opinion, for what my core strategy is, the cleanest setup here was this candle here closing and simply taking calls and using this candle as a stop. Now you can see here, this respects it almost perfectly here. So um, it comes back, it tests here, and then it breaks out. Once we start to break out here, so we've already established that we're breaking out from the plan level, we're breaking out from opening range, consolidating here, and now we're breaking up higher. We actually hit our second take profit, but just to give you an idea of how do you kind of figure out, like, are we going to get continuation? Well, this is a good example here. Again, strong candle, pushing up, fair value gap left behind on this candle here. Now you have another key level of reference point for, let's say, a stop or for entry, something like that. So you break out here, you come back to this level here, you test, you can take calls using the EMA as support, conviction, and this fair value gap here, and it works like magic. And we push up here and new all-time highs. And this is the price action that I'm looking for. I'm looking for this essentially, 9:30 to 11:30, 12 p.m. I just want to catch this here. Okay, I'm going to create my plan. If it doesn't happen, if we just stay in here, that's fine. You can trade the range pivot to the high and to the low. Obviously, we're watching the VIX, we're watching other tickers, we're watching um, um, for tick, extreme tick levels, tick fades, stuff like that. But as just a very simple way of looking at it, the only thing I really want to catch here is this momentum to the upside or to the downside if we get momentum to the downside. I don't want to trade this. I'm not interested in trading this. This is not attractive to me. So if you look here at 12 o'clock, after 12 o'clock, so we made high of day, you know, I'm all set with trading, trying to trade this through lunch and all that. More often than not, this is what it's like. So very defined, repeatable setup. It's not always so perfect um, as it kind of was today, but I create the plan. I look for my significant price action, and then I try to execute on it. And I just trust in the process. And there's no emotion. There's no, do I think it's going to go higher? Do I want to go higher? What's the sentiment? I just look at my setup. How many boxes can I check? And that's it. There's other things that I look at, but from a very simple, just price action standpoint, this is what I'm looking at. I mean, I can look at volume, I look at volume, I look at gamma. That's all great tool stuff, like all great tools and great stuff to use to help my conviction. But from a very just basic price action trading perspective, this is what I'm looking for. And if I had nothing else, if I had no other tools, I can trade simply just with this 5-minute chart. That's it. And my rectangle tool and a line tool. That's it. So that's it. I hope you enjoyed today's video, and I'll see you guys in the next one.